What's up, guys? I'm Chad here from Slate House, and I just wanted to talk through a little more about real estate and the different classes. We get asked a lot from newer investors of what kind of property they should buy, and we often answer in terms of a type of class. And I thought that it's kind of a real estate specific term, so I want to kind of explain what we mean when we say classes. So essentially, real estate's typically grouped into 4 classes: Class A, Class B, Class C, and Class D. And so, as I explain each, I really wanted to graph it because that's going to make the most sense. There is no right answer of what property to buy. We bought Class A, and we bought Class B and Class C. We're also a property management company managing over 3,000 units, many of which are A, B, and C, and even D. So we're accustomed to all of them, and there is no right answer, but it's good to know kind of what you're getting yourself into. So let's start with Class A. Class A is typically either new construction or built in the last 5 to 10 years. This is going to be in a nice neighborhood. And so my graph here, I'm going to show cap rate starting around 5 cap all the way up to an 11. So a Class A property typically is going to be the lowest cap rate. So the expected returns are going to be lower. And that's because you're buying an asset that frankly is lower on the risk scale. So down here I have risk variance kind of graduating. So we're going to put Class A right here. Essentially, you can expect probably a cap rate of 5 to 6%, but also lower risk, right? It's probably new construction. It's easier to expect what's going to happen for the next 10 years. All right, next, talk about Class B. Class B is something that the average American would be happy to live in, but it's not quite as new, right? So there is going to be some maybe outdated mechanicals. Maybe the kitchen isn't brand new, but it's still going to be in a decent neighborhood, right? So I'm going to call this Class B. You know, it totally depends on the market, but from a mid-Atlantic perspective, you could expect cap rates in kind of that 7 to 8% range. Again, kind of like medium risk variance. All right, the last class I'm going to talk about is C. I'm going to really say C and D, right, for this example. And that's going to be up here. Class C and D, typically you're going to be expecting cap rates north of 10%, right? So it's going to look really good on paper. Higher risk profile, though, right? So these are properties that are typically lower income, typically higher vacancy rates, higher eviction rates, and then just higher variance. And I say variance because that could be stuff like, could be some more stuff going wrong, right, with the property. By the way, the best property we've ever acquired was a Class C property in Reading, Pennsylvania. So it does not mean high risk, does not necessarily mean a property you shouldn't buy. Best thing we've ever bought was a Class C property. I'm thrilled we bought it, right? So you just got to know what you're getting yourself into, know there's high risk. So the question today, you're a brand new investor, you're just getting started, where should you invest? I typically like to push people right here. Class B properties as your first investment. Here's why. Class A, you're going to see lower returns. So I get a little nervous about it because you really have to know what the rents are going to be. Oftentimes, new investors want to see some better returns than what Class A is going to represent. On the Class C and D, there's just more risk, and I feel more comfortable oftentimes pushing first-time investors into Class B. It's a class that typically is not going to have as much risk, but better returns than Class A. Easier to predict. At Slate House, we have a bunch of agents who are pushing people into Class B properties all the time, helping them find those assets all over the Mid-Atlantic. On the property management side, these are a little easier to predict your returns over the next 5-10 years than, say, a Class C or Class D property. Like I said, cap rates, I'd be expecting probably 7 to 8% cap rate. Totally depends on the market and the property as well. You may still get a great buy of a Class B property at a higher cap rate. Okay? So those are the classes. Let me know if you have any questions. Once again, this is Chad from Slate House. Chad at slatehousegroup.com if you have any questions. Thanks. Bye.